The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Wednesday, the 19th of May, 2021. On the podcast today, Dan Lane, senior analyst at Freetrade, discusses inflation, Premier Foods, and Escape Hunt. Also on the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most read RNSs too. By the way, you can see, as always, both these lists at voxmarkets.co.uk, where you'll see a wealth, a bunch, a veritable feast of other content. There's one on Ixico. There's an article on Ixico, I should say. There's Watch the Kavango Resources webinar, hosted by Vox Markets from last night. It's Myriad Advertising, says research has highlighted the effectiveness of its technology. There's Paul Hill again, smiling at me. He would be, because he's talking about cake box. Who doesn't like a cake, eh? And of course, at the top of the page there at Vox Markets, you have the COVID-19 index. Fusion antibodies is the biggest rise today, up pretty much 9% to 152. Biggest faller, Avacta, down to 259. That's 3.5% down. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Dan Lane, senior analyst at Freetrade. Thanks for joining me, Dan.
Good to speak to you, Justin.
Yeah, and just quickly, for people not familiar with Freetrade, what's it all about?
We're a low-cost commission-free trading app you can use for investing. We're just trying to take all the pain away from paying huge amounts of fees to get into investing. We really just want to make it accessible for everyone.
Yeah, marvellous stuff. Okay, let's talk first of all, because it's the I word has been raising its ugly head around, and it's been shaking the markets, wobbling the markets a bit. Inflation. What's your thoughts, Dan? Because some people say it's transitory, it's not going to be around for long, but it will pop and drop. But others are saying, no, it'll be around a bit longer. What's going on here?
Yeah, absolutely. That word transitory, I haven't heard it used as much in my life. I think, we saw it in the US. We saw US inflation jump to 4.2. There's a lot of factors in there, not least the stimulus package at play. In the UK, the fears have kind of come over here today. Listen, I think transitory is going to have to be the word. I really can't see this sticking around. Amid the bigger picture, I think we all have to, kind of look at what's happened over the past year and maybe not use traditional yardsticks for an extraordinary time. So, the metals lovers, the metals bugs, they'll kind of be licking their lips at kind of the higher inflation figures. But I can't see it sticking around at this level for the rest of 2021.
Yeah. Okay, so it's going to pop and drop a little bit, you think? So, so the market should, long-dated assets, of course, suffering a bit. So a bit of relief for them, yeah?
Yeah, I think so. And then, listen, there is a trade to be had here, probably, but when you look at what actually the consumer spending driving it, I think if we take a step back and look at what consumers are planning to do, they're planning to go out and spend once they can. This isn't the normal period whenever there's just like a dearth of spending because no one has any money. Everyone has the money. There's pent up demand, and whether that is buying a holiday later in the year or going out and buying other services rather than goods, we'll probably see that coming through. I think that's probably something we need to watch on. Less goods, more services as we make up for not having any services in 2020.
Mm-hmm. A lot of stuff. Okay. Let's talk about companies. So Premier Foods, of course, it's got a lot of things under the hood there, isn't it, Premier Foods? And but what's happening? They've had some news out?
Yeah, absolutely. It's one of these big brand stables, a bit like Diageo that seems to own anything that you're gonna take a tipple of this evening. But we're talking Mr. Kipling, Ambrosia, some of the British names there. Really interesting, I thought, in today's results was the decision to pay a dividend for the first time in 13 years. The dividends are something that we were starved of last year, and for a lot of companies, it's kind of been can we appease shareholders and get back on track? Can we tentatively dip our toe in the water again? I think in the UK, these dividends are a much more important bellwether of a return to normal than maybe in the US, where the high growth stocks are kind of taking center stage. But we're a real nation of equity income investors in the UK. So that's really surprising. Really interesting to see them coming back into the dividend fold. And posting their highest operating profit in over a decade. If you think about what you were shopping for over lockdown, you probably bought one of Premier Foods goods, and you probably had it at home in front of the TV. So that's kind of what's boosting them there. But it's good to see, a little bit more attention paid to kind of firming up dividend investors' hopes there.
Yeah, I'm looking at their on the website, just looking at their brands there. So you got Ambrosia, Angel Delight, Atora, Bachelors, Birds, Bisto, Cadbury's, Home Pride, Lloyd Grossman, wow, Lion, Marvel, Mr. Kipling, Oxo, Paxo, Saxa, Sharwood's, wow, smashed. They got a lot more things than you think. Yeah, that is a staple, isn't it? I'm just looking at their results there. And revenue up sort of 10.3%, trading profit 11.9%, adjusted profit before tax up 23.5%, which is, wow, a big jump, isn't it, for a company of their size,
Absolutely, but this is the result of not being able to go out and spend on anything else. I mean, it really, if you think about the early days of the lockdown, if you wanted a curry, you probably did opt for Sharwood's as opposed to a takeaway, because that's the only thing that you could probably do. So in that sense, it's probably, I mean, all the positivity and the excitement might be short-lived, but there will be sticky customers who think, actually afterwards, lockdown got me into a great position financially. I'm not going to go out and put myself into debt again. And there are the options of maybe just like a date night in with an Angel Delight, as you've just said, rather than going out and spending loads.
Angel Delight. But you know what? Sharwood's, right? I'm sure I get the mango chutney and some of the sauces. Yeah, mango chutney from Sharwood's. I can't have a curry with mango chutney. I've got to have it. And it's one of those sauces. And mango chutney, I never have it with anything else, ever. And I love a mango chutney, but I almost think I haven't found anything else it really goes with. I've tried lots of things with mango chutney before and never really goes with anything else apart from a curry. And I thought, I can't be just one food is suited to. It's going to be suited to other foods. But Sharwood's is always in the cupboards for us. So it's probably one of those brands, isn't it? Everyone's got something in their cupboards belonging to Premier Foods,
Yeah, this is it. And this is, we're talking staple British consumer products here. If you think about Bird's custard, I mean, I grew up on kind of Bird's custard. I'm sure I have a few packets in the cupboard now. But these are the things that we tend to overlook because we're told in the investment community you need to look for the next hot thing. Arguably, results like today show us that there are gains to be made in things that just roll under the surface, and you kind of outsource your thinking to brands rather than the next hot tech stock.
Yeah. Now I asked about what we should discuss, and you mentioned Escapement had news out and it's fallen today, and obviously I hold shares in Escapement. I'm a significant holder there, over 3%, and I've. It's done very well since I started buying it sort of 8 pence, and it's hit sort of close to 50 pence recently. But they had financial results out, and of course, we've been in lockdown, and and also I think there's a seller in there using, I don't know what's happening. You get liquidity around financial reports that sometimes helps a seller get out, and they sort of sell into that. So I think that the results, the thing is. They operate escape rooms, virtual online as well, and they have a franchise. So of course, their 2020 results are not going to be the best. And someone did say to me, "So what happened to their results?" So that, well, you're not around. There's been a pandemic on. Pretty much everything's been shut. So and they did 2.7 million versus last year at 4.9 million. But they had 8 sites last year, and now they've got 18 sites. So they've increased their acreage by 110% in lockdown. And I can't think of any other leisure business that's done this. They've got cash, and I remember there was one report out from a website where they looked at the issue of equity they've done since they've IPO'd. And they said, well, they started off with 10 million shares in issue, and now they've got 88 million. But I know, but they always said they're never going to be profitable before they had 17 sites, or it's ranged between 15 and 17 sites. They've now got 19 sites. So when they start trading again, they'll be, EBITDA positive and cash flow positive. But of course, I mean, sometimes you get, what happens is when the financial results come out, you get a glimpse into the past, but stock markets, as we know, look ahead. So you can't just judge, I just think when you invest in a company, it's like yourself, you're an investor. When the financial results come out, you know a lot more about the company than what's in the financial results, because they're looking at the history and stock markets look ahead. So I just said never base everything solely on historical results. It's good to read through to get some information, but of course it's at least 6 months out of date, and especially in a pandemic, it's way out of date because it's looking ahead. So it's very odd. I mean, if you look at it, the market cap of Escape Room is about 40 million. They did 2.7 million revenue. So you're going to get, so if someone who doesn't know the company looking at that saying, wow, that's like 15 times revenue and they're making a loss. But what you don't understand is at the end of this year, they'll be doing 10 million in revenue. Now the share price has dropped a bit. That's only 3 times revenue and they'll be profitable. So, it's completely 2 different companies from the one you're looking at on the financial report to the one that's going to be, here in say 6 months' time. And so that's why I think, it's called drop opportunities, where an investor can take advantage if they know the company is improving and is heading toward profitability. Any dips on financial results or interim results are good to buy into if you know the company. That's why I think private investors can get an advantage. But anyway, as you can tell, I like the company and I hold them. I've held them for a long time. I'll continue to hold for a long time. I think they're a brand leader in a growing sector. And yet you've got to expect big dips in small caps. You get big sales coming, and that's the thing, isn't it?
Yeah, I mean, listen, I don't hold them, but I knew you did, but I thought it'd be worth talking about them given the results. I actually wrote about them in January of this year, and on the Freetrade Invest Hub, where we do our daily articles. I wrote about them there, and one of my things there was saying that whatever they do, whether the results are storming come kind of May time, whether they're terrible, whether they're amazing, we really probably should give them any credence. They shouldn't affect our view of the long-term ability of this company. We've had to give a lot of companies a bit of a break over lockdown. I mean, given the banks, how much of the commentary in the press was about give them a break, look beyond these results. If you're going to do that with the big banks, you can certainly do it with a small cap. With huge growth potential. One of the things you touched on there, which I think is so much more valuable to looking at kind of these past looking results, is their ability to pick themselves up over lockdown and say, right, are we just going to roll over, or are we going to use this as an excuse, or are we really going to develop what we can? And opening those new sites, 18 sites, whenever. They had no right to do that, and they just went out and expanded. That tells you a little bit more about management than probably these results do, and that's what I'm really interested in. Yeah.
Well, I mean, and like I said, everything's been locked down, and I think we'll go back to now. I mean, there's obviously still a bit of fear about the Indian variant, but I think the more data that comes out about that now is showing that. The vaccinations we have are effective against it. And I don't know if you saw that today. They're saying now that 50% more transmissible is a bit inaccurate because there's a 50% chance of that. And they're saying now that the Public Health England is saying they've looked at the figures and the data doesn't stack up. It's going to be a lot less transmissible than 50%. So the worry that the press stoke up these fears that we're being locked down again. So you have that fear playing on the but often fear is our friend. You're right there. When you look at this company, this gone from 8 sites to, in fact, 19 they're going to be at, because they've just announced Lakeside as well. And Lakeside is one of the biggest footfall centres they've got. They've done, how many of the companies are leisure companies that have expanded during lockdown and have plenty of cash? It's like, there's not many. Most of them have shut down sites, and if you go back beyond, if you look at try and look for like-for-like sales, they look at the most mature sites on their own, 25% like-for-like improvement in revenue. And in fact, in all 8 mature sites, they had over a 12-week rolling period at 59% like-for-like sales. So the growth is there. And that's what you're going to look at. I mean, is there demand for their product? They are going to be a market leader in a leisure sector that's growing, and they're in the best sites with high footfall sites. And they'll be way and above, market dominant here, above any other competitor. And I think at a 30 million market cap, when they've only opened 19 sites so far, they go over 50, plus they'll have franchises, online games, play-at-home games, and everything else. I think any dip, should be bought up, because there are not many market leaders in leisure sectors that are under, 200 million market cap, So if you look at the Hollywood Bowls or Cineworlds, and in fact, Hollywood Bowl, and a bit of that, They do have a couple of competitors, but I don't see anyone as big as as big as Escape is going to be, with very few competitors close to them. Because I think there's a few others out there with about 4 or 5 sites, but they've got a 19, and they're all pretty much getting in better areas, and they're in prime locations. I don't know if you saw them. They did a bit of a cachet on the news of the day when they opened up on Monday. Sky News went to Manchester, the Arndale Centre. They spoke to one of the managers there of the Escape Hunt, and it's typical. Like, you got all these restaurants, nice restaurants, high branded restaurants, and they're in there as well. Pretty much the only entertainment venue in that area, and so the footfall is massive. And I've said to people before, when you go to bowling or cinema, where do you go? You basically go to these high footfall retail centres. You don't go down a back alley somewhere to some independent. Generally, it's so. I mean, to me, it's you've got to look longer term on this. And the dips sometimes, the big sellers, it happens. If you know the company, it's an advantage. I'm very biased, of course, because I own the stock. But, you must see it with yourself. I mean, you're an investor. When you see a big dip in a company that you hold on sort of final results, and you think, hang on a sec, it's not even accurate really now. They're old news,
Yeah, I mean, firstly, in general, the small caps serving the domestic economies, we've seen in the US, we've seen that those have been selling off as people take these short-term trades on kind of domestic spending going up, and then just getting a little bit, they don't need to take any more risk when the results come out, so they sell off. It's happened in the UK a few times. But if we look specifically at these companies, I mean, I'm a bit of a boring investor. I need companies who can control their own future, control their own destiny, and take advantage of kind of geopolitical events or global events rather than be, tossed about by them. If we look at Escape Hunt, I mean, far be it for me to tip anything. It's certainly not what I'm doing. But if you just look at what you have to ask are your companies making the most of these downtimes to improve themselves? Yeah. People can make their minds up whether Escape Hunt has done that. But really, if you look at the kind of their digital and remote play options that they've launched, those have made money at a time whenever that proposition didn't even exist in 2019. Yeah. So you've got that side of things as well. And I was about to say what you've just said, these incidental spending habits, it's a bit like WH Smith. No one thinks, I'm going to make a day of it and go to WH Smith. But you do pass by it and you stop in for a bottle of water and some chewing gum and maybe Stephen Gerrard's autobiography or something. But these incidental, you're going to go to the cinema, you're going to stop by the restaurant that's in the same cinema precinct. You'll probably do a little bit of shopping in the same shopping centre. Escape Hunt is, there is a market attempt to get into that framework and that ecosystem of being in that kind of mid-range spending habit, and they're doing it well.
Mm-hmm. Yeah, exactly. And people will go back. I mean, I think there's obviously people are going to shop online, but let's be honest, these retail outlets have entertainment and restaurants and shops. Our behaviour will revert to normal a little bit as soon as after the scare's gone away and the fear's out of the way. People are always. My wife loves going to shops. She loves going to retail centres. She hates shopping online, and I'm sure there are lots of people like that. They have to want to go and look at stuff. They want to go eat out. Enjoy. That's always going to be there. Humans do want to do that. And I think as soon as this pandemic's closed and vaccinations are widely distributed around the globe, pretty much, I think we'll see a revert to norm a little bit. I think in certain areas, I mean, hybrid working, I think will change a little bit. I think people will maybe do a hybrid office, and homework a little bit. But people are always going to seek out, aren't they, restaurants and entertainment? That's always going to happen.
Absolutely, and even if not, I mean, they want to be social. We haven't been social in so long. Look at the excitement that we had getting back to kind of sitting indoors with a friend and having a drink. Yeah. These certainly cinemas are exciting, and they've got the press because of the dearth of films coming through, and then the challenges with funding and everything. But you go to a cinema and you sit down in the quiet and you sit on your own. Essentially, these social engagements and these things that require you to be with your friends and family members. We've already seen evidence that the service sector is probably going to pick up in the second half of the year much quicker than the goods, because we're fed up with goods actually at the minute. We've done enough Amazon shopping. We want to get out there and spend time with our friends and family. These services could do well, yeah. Well,
you're right with that. Do you know what? Me and the wife thinking about cancelling our Amazon Prime, because a friend of ours has done it, because it's just so easy to order stuff. We end up ordering rubbish that we're going to throw away. It's so easy to get it next day, And we're just thinking of cancelling it because, like I said, we are sick of just buying stuff now. We just want to actually spend on services and stuff like that. You're right. Marvellous stuff. Dan, thanks for that, fella. Hopefully we'll speak to you next week.
Absolutely. Thanks, Justin.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They're at 5. Sabian Technology, down 10%, 25 pence. At 4, Chamberlain at 13% up to 13.75. At 3, Amigo Holdings, non-mover 23.58. At 2, Hurricane Energy up 68% to 1.22. And at 1, it's Plant Healthcare. It's down 1.1% to 16.7 pence. Okay, it's time for the top 5 most red RNSs. Here they are. At 5, it's Tirupati Graphite, application for share trading on the OTCQX market. At 4, Hurricane Energy, requisition of general meeting. At 3, Hemogenics, director PDMR shareholding. At 2, Amiga Holdings, temporary suspension of shares. That's Bitcoin, crossing 38,000. And at 1, Open Orphan, court approval. Okay, you can check that out at voxmarkets.co.uk. Thanks for listening. Muchos appreciato.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.